In the U.S., stock index futures posted sharp drops ahead of Monday's open as losses from markets overseas weighed on sentiment. Around 6 a.m. Eastern Time, Dow futures slipped 124 points, indicating a drop of 124.51 points at the open. Now, the Nasdaq and the S&P 500 futures also indicated a negative open for their respective markets. 45 U.S. trade associations, which represent some of the biggest firms in the country, have urged President Donald Trump to not inflict tariffs on China, stating in a letter that this would likely be particularly harmful to both U.S. consumers and the economy. G20 financial leaders are due to meet in Argentina today, where trade will likely be top of the agenda. Investors are looking ahead to Wednesday's Federal Open Market Committee meeting, which will be headed up by newly appointed Chair Jerome Powell. The central bank is expected to raise interest rates for the first time in 2018. Now, the quarterly financial report is due out at 10 a.m. Eastern Time, while in corporate earnings, Chatham Mobile and Oracle are due to report. In Asia, markets closed mixed today, with Japan's benchmark index underperforming regional peers as investors also turned their attention to the Federal Reserve's two-day policy meeting later in the week. Japan's Nikkei 225 recorded steeper losses as the session wore on, with the index declining 0.9%. Investor sentiment took a hit on the back of an ongoing political scandal involving Prime Minister Shinzo Abe over the sale of state-owned land. Meanwhile, South Korea's benchmark Kospi index slid 0.76%. Market sentiment in Greater China markets told a different story, with the Hang Seng index edging up by 0.16%. The Shanghai Composite tacked on 0.3% to finish at 3,279.60, and the Shenzhen Composite added 0.27%. Meanwhile, Australia's S&P ASX 200 got off to a positive start to the week, with the index advancing 0.17%. And back here in Africa, South Africa's Tiger Brand says it expects its meat products unit to record a monthly loss of up to 33 million rand after it suspended operations at 4 sites after a Listeria outbreak that has killed 180 people in 14 months. Health authorities ordered a recall of processed meat known as polony made by Tiger Brands and RCL Foods 2 weeks ago in response to the outbreak, the worst ever documented, with nearly 950 reported cases. Tiger Brands said the potential losses, which it estimated at 28 to 33 million rand, were for March. In addition, the food producer said it was taking a 337 to 377 million rand pre-tax hit due to the cost of a product recall and suspension of production at its Polokwane, Grimston and Pretoria and Clayville sites. Societe Generale SA says it has entered into a more active phase of discussions with U.S. authorities over their investigation into IBOR submissions and transactions made by the French bank involving Libyan counterparts. The bank said it hoped for a resolution to the two matters in the coming weeks. Societe Generale said that it could not yet determine the financial impact of the dispute and that it had booked in a 2.3 billion euro provision for all disputes into its financial statement. Within this provision is approximately 1 billion euros that is allocated to IBOR and Libyan matters. And 7 firms have submitted bids to buy a majority stake in Zambia's sole 24,000 barrels per day Ndeni Petroleum Refinery. Zambia Development Agency procurement specialist Wela Kapita said Glencore Energy UK Limited, Vital SA, China Petroleum Technology and Development Corporation and Filia Trading were among the firms that have submitted bids. The others are joint stock company Global Security of Russia, Sahara Energy Resources Limited, and a consortium of Beijing Hosanji Green Chem Company Limited, and Avic International Holding. Zambia is looking for a strategic partner to work with Indeni Petroleum Refinery, built in 1973. The oil company is currently 100% owned by state-controlled Industrial Development Corporation Limited. And miners operating in the Democratic Republic of Congo won't secure substantial concessions in talks with the state about changes to the industry code. Mining companies, including Glencore plc and Rand Gold Resources Limited, are pressing the government to roll back on some of the reforms President Joseph Kabila signed into law this month. The modifications will raise taxes and other costs for operators in Congo, Africa's top copper producer and the world's main source of cobalt. Kabila met top executives from major foreign investors on March 7 to discuss their objections to the new law, which was approved by Parliament in January. The president signed the code on March 9, but assured miners that their worries will be taken into account in talks with the government. The revised code, amongst others, removed a measure protecting mining license holders from complying with changes to the fiscal and customs regime for 10 years. That means all mines face higher royalty payments and new taxes. And American equity firm Milost Global is looking to inject as much as $1 billion to recapitalize Nigeria's Unity Bank plc, which is struggling to build buffers after a slowdown in Africa's biggest economy. A New York-based Milost offered to invest $700 million in equity and $300 million in 5-year bonds that can be converted into shares in the Nigerian lender. The private equity firm will get an initial stake of about 30% in the Lagos-based bank in exchange for its first equity investment of $250 million. The transaction is still subject to a due diligence as well as regulatory approvals. However, the first part of the deal will be completed in the second quarter. The rest of the cash will be drawn down in intervals over a period of 4 years, provided Unity Bank has sufficient shares to issue to Milost. After the break, we'll look at micro-lending in Nigeria. To stay with us.